Hello again, welcome to another market update, very last for this year. Today I'll be answering the age-old question again. How is the market? Based on stats, data and my personal analysis of sales that have happened in and around the Calgary in November 2020. First I will look at sales summary, inventory story and pricing picture. And after that I will give my advice to buyers and sellers. So how was the sales in November? Let me tell you, we had another blowout month, especially considering we were in a second last month of the year. In November, 1,437 transactions were recorded within the city of Calgary limits. That is up 25% at the same time last year, when we only recorded 1,146 transactions. That's a huge improvement. To put this into the perspective, this is as strong as it was a first month of the spring market in April last year. And spring is always a time when we see an excitement and an increase of activities, and these numbers are great news. And look at this graph below. This is a November's sales per day graph, and it shows how consistent we were through the month. And this is really good to see because usually at this time of the year, activity starts to slow down. And this second graph shows sales per week versus November last year. You will see that we were ahead basically for all parts of the month, and the gap even grew at the back part of the month. This sets us to believe that December will continue along the same pace. Furthering that positive news, please check out the showing graph below. It displays the pace of showing comparing to the last year. What you will notice is that we are so much ahead. And to be very precise, we are 161% ahead. This is the largest year-over-year gap that we have seen this year. Out of curiosity, I pulled a graph for the North America, just in comparison to other markets. What you will notice is that the activity has slowed down much more than ours. This is very interesting to see and even a little bit inspiring because Calgary market has been underperforming for many years comparing to the rest of North America. Now, each market acts differently, but the common thread this month is that all four market segments have increased, even the apartment market. And here are the year-over-year numbers. Detached homes, as our biggest market, saw 25% increase. Semi-detached were the best performers of the month with 50% increase. Row homes and townhouses, about 25% increase following the detached segment. And surprisingly, apartments saw 12% increase. Huge increase comparing to the last month. If you're concerned how your price point performs in your market segment, please get in touch with me and I'll be more than happy to help you. Let's start the inventory story, pulling up the graph that paints the picture of how the last month was. You will see that new listing coming of the market has decreased consistently throughout the month. And the second graph shows you how that played out in terms of active inventory this year versus active inventory last year. That also played out nicely. And in this third graph, you will see the actual inventory day by day from the beginning to the end of the month. At the beginning of the month, our inventory count was over 5,800, but by the end of the month, we were at just over 5,000. This is a significant 1 month drop. We expect this at this time of a year, and this is what we further expect down in December, where we always hit the lowest inventory levels. In summary, we saw 6.7% less new inventory coming on the market, and overall we see 16% less inventory on the market than the same time last year. So let's talk about the pricing picture. With all of the positive signs we discussed in a sales summary and inventory story, you would expect that the pricing has performed well. And it did. For the 6th straight month, we have seen citywide benchmark price increased for 1.6% and now sits at 423,600. And the following graph shows further breakdown and benchmark price across 8 Calgary districts. With this and all things that I've discussed today, I believe that we find ourselves in a very optimistic position that continuing pandemic won't have further downward pressure to the market. And it is certainly a good news for many of us. And here is my advice for buyers and sellers segment. When I answer how is that market question, it is a one thing to discuss all stats and data as we did earlier in this report, but what I find more important is discussing actual pace of the market. The pace is a true indicator how is market actually performing, and it takes into account the sales, inventory and pricing. I look at the pace from a few different ways. One of them is months of supply and the other sales to listing ratio. But first, let me share sales to listing ratio graph. This graph shows the ratio going back week by week to mid-May. As you can see, the average sales per day ratio has climbed ever since, which simply means that larger number of homes listed are being sold. Or, in other words, higher listing absorption rates. Higher rates are good news. Higher rates means that properties are coming on and off the market faster, and also higher rates means that the pace has increased. This is represented by our days on the market adjustment. As we finish the month of November, our days on the market dropped 14% comparing to the same time last year. And we have seen days of the market decline across all of the 4 market segments. Days of the market means that things are moving faster, and a pace means that the market is improving. Overall, it gives us a healthier market. Now, let's take a look of months of supply graph. As the months of the market decreases, the pace of the market is increasing. This matrix says that it will take X number of months for all of the inventory to sell, assuming the pace of sale remains the same. As we finish November, our total months of supply was 3.5, in contrast to the November last year when the number was 5.2. So this is a significant change to better. For those of you in the market buying or selling, please make a note of this. So what does this mean to you as a buyer? As we enter December and push towards January, we will see another significant drop-off in inventory, because this is what just sellers do at this time of a year. And also, the demand remains very high comparing to usual seasonal trends. So be ready to hurry up against the others in a pursuit of your next home. Don't worry that you will be overpaying. The market is not that hot, but pay what you need to if the right one comes across. And what does it mean to the sellers? If you priced really well right now, you will move your home, especially in a semi-detached market, detached market, and a row and a townhouse market. But don't get too greedy. The market is good, but only in a relation how rough it has been. And if you're an apartment seller, despite having a great month, we will need to see many more good months in order for a pace to recover. Well, this is all for this time. Thank you very much for watching. I really put a lot of time and energy in making this the best market update in a city. Thank you again, have a Merry Christmas, and I'm looking forward to reporting back to you in the new year.